What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Very good question that everybody asks me. How much money does it take for me to retire on dividends? So I'm going to go over my dividend investing strategy. Yes, I have $225,000 in. I'm going to round it and just say 225,000. I've been doing pretty well with my dividend portfolio. I've been earning a lot of money as a dividend investor. And I'm going to explain to you my strategy and what I plan on doing and how much money I'm going to estimate that it'll probably take me to retire on dividends. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my strategy right now. So let's go over my dividend portfolio right now. So I've been paid so far $6,866.87, plus I have $575.14 pending. Now it says 8,473 right here. I'm not going to be making that amount. It's just an estimated how much I have left, okay, with my dividend portfolio. So what I plan on doing, okay, is the way I have things set up. I am having certain ETFs buy dividend growth stocks because I think dividend growth always wins. It's my philosophy that dividend growth always wins. And yes, I have $225,000, but I don't think that's enough. And I'm going to give you my estimate to really make a good guess as well. I have 180 positions, and we're going to go by shares. So I am a little bit down with BTCI and BITO and HOOW. TSLP, I'm up actually $2,000. So a lot of these ETFs that I own, HOOW, let's just say WPay, CHPY, GPTY, find some good ones, Blocks, XDTE, YETH, Maggie, MAGY. Let's find some other good ones that are weekly. I'll just show you an example of what I'm doing real quick. The other thing is reaching the $2 million mark can be possible with my dividend portfolio. But again, I have some high yielders. So I have this section right here, which is mostly the weekly payers. And I don't feel too confident with these weekly pay ETFs. Again, they are kind of leveraged because if the stock goes up, they go up. Stock goes down, they go down. But the distributions aren't the best sometimes when things go down. So I have a section right here, and you'll notice that I own shares in one section of LFGY, CHPY, and GPTY, but I use that income to also help reinvest this so that I can buy more shares to buy dividend growth stocks. And I'm going to show you my list of dividend growth stocks that I feel more confident in the long run. We see YBTC here. We have HOOW, and again, I own a lot of shares at HOOW. I have COIW, I have TSLW, I have NVII, PLTW is doing very well. I have MSTW, that one has been down significantly. But you'll notice that I have HOOW as well because I'm using that income to buy HOOW. So the income in one section of HOOW is buying another section of HOOW shares so I can build up and buy more shares, allocate that so I can buy dividend growth stocks. So again, I'm going to be very repetitive with that. But again, for my strategy, getting up to maybe 1 million, I should be in pretty good shape. Now, the long-term goal, and again with these dividend growth stocks, which I'll show you, I'm going to show you some of my REITs too. But I also have a section with the NEOS ETFs because they're a little bit more stable. So I need consistent income that I can rely on. So you can't just rely on these weekly pay ETFs for income. It's just not consistent. So this one also KQQQ, I'm starting to buy. So I'm very excited for that one. You'll notice that BTCI I'm rebuying. But QQQI, SPY-I, and IWMI, those three I feel very confident in retiring on passive income. So you have to have stability. And that's the biggest thing to retire on dividends is stability. And going through dividend stability and a NAV stability is very important. With my most reliable ETFs like SPY-I, IWMI, and QQQI, and maybe even say XPay down there. That's another one that I want to be a little consistent. This one as well, KQQQ, I want consistency with. So I'm going to jump to a few other sections of my dividend portfolio. I believe that you should have high yielders as well. So some of the high yielding stocks, I'm going to jump to here. Having high yield stocks, I value them a lot because I do think you can have high yield and dividend growth. Some of them that I have are pretty good dividend growers as well. Now, I added Verizon, okay? I know their dividend growth isn't the fastest and best, but it does have a very nice, stable so far high yield. Brookfield Asset Management, and again, a lot of the Toronto um, the banks that are in Canada, like Toronto Dominion. I got Morgan Stanley. Wells Fargo's another good dividend grower. One Main Financial, it's a little bit of a high yielder. Invesco is a company, actually, is not too bad either. So that's one to keep an eye on. Philip Morris is a high yielder. Bank of Montreal, Bank of Nova Scotia, T Rowe, Manulife. So you see BMO, BMS, Manulife. These ones are high yielders and they have consistent dividend growth. So with these consistent dividend growers, it's going to help with me getting raises and hikes. Now, the problem again with the weekly pay ETFs, people like to praise WPay, but how do you feel making 50 cents one week and 60 cents and 70 cents, and then you go back to maybe 40? So there's inconsistency there, which kind of alarms me. If I'm going to try to retire on passive income, you got a high expense ratio. What happens if the market goes down? So you need to have a good balance. Look, I got Bank of America, Prudential, and again, CM, that's another one. I got a little IBM here. Franklin Resources, that one's been down a little bit. Fidelity National, again, that's not Fidelity, the company. And Old Republic, this one, ORI, is another one that I really like. Now it's down, but it's a good deal right now for me. So ORI is another one. So again, you see I did an estimate. I want to say maybe 1 million. I'd feel good. And I'm quarter of the way there. And this is the most important thing. If you're going to retire on passive income, you have to have a balance. Now I have a lot of holdings. I do. Here's some of my energy sector ones that I have. But I also have REITs. I have the higher yielder ones and the grower ones. But this is what I really want to show you is the importance of balance. So I have high yield, and I'm going to have ones that have very good dividend growth. And a lot of my income, as I said, is going to be hitting these very, very strong. So I'm going to jump to this. And I'm going to explain why I like to have ETFs and dividend growers. So you notice I'm already up. So that's a good thing. I have a pretty good percentage of my section with dividend growth stocks. Market gains up. This is my ETF section. And I did add strategy and strike and STRD to it. I do think that they potentially can help. But I have Vanguard. dividend appreciation, DGRO, SCHD, GPIQ, FDDV, UDVO. That's another one that has potential for growth is an options income ETF. Then I added some stocks here. I also have IVVW. I like that one as well. But BMI, CSL, Cintas, and Ecolab, and Goldman Sachs, those are very good dividend growers. So I have a combination of ETFs and dividend growers. And those are on the high upscale one. But if I have a higher percentage, guess what? My passive income will be buying shares of that. So I'm creating the dividend snowball effect using that. So I wanted to show you my strategy. And here's my other section that I have. My other dividend growing section. I have Taiwan Semiconductors. I have Broadcom. I have Jackson Financial. I have T-Mobile. I have SCHW, Charles Schwab. I have Capital One Financial. I have Kroger. I have American Express. I have United Health Group. I have Visa. I have Ares Management. I have MasterCard. I have Microsoft. I have Lowe's. I have Home Depot, JP Morgan, Pepsi, Aflac, Starbucks, AFG, Nike, McDonald's, McCormick, Procter and Gamble, Tractor Supply, Dollar General, Yum Brands, ADP, Mandela's International, Hershey, and Darden. So the income, which I'm going to go to, I'm on pace to making $7,000 a month, it looks like. So the good thing is, this appears to be so far some of the dividend growers. So I'm estimated that amount. But again, I need these dividend growers to start distributing 3,000, 4,000, 5,000 a month. So I feel confident in getting to the next step. I can make a lot of money with these weekly pairs. But again, I need to have consistency with the dividend growth stocks and the high yield stocks. So if I'm not having consistency at maybe 1 million, which I did some numbers, may have to do 1.5 million because I want my dividend growers to get to a certain point. Yes, I will be at a point where my income may surpass of what I'm making right now as a nurse practitioner, but I'm not going to feel confident on the consistency. So I'm going to reinvest, reinvest until I start getting to the point where I'm reaching probably 13,000, 14,000 to reinvest each month. That's probably the numbers where I'm looking at and estimating. So everybody has a different strategy. I'm just explaining to you my strategy and my philosophy, what I'm doing, how I'm going to do it. And there's going to be new ETFs, weekly pairs, which I'm going to probably add to that section. But again, the long-term wise, I'm not going to rely on them. Now, they're the ones generating me a lot of income for weekly, but I want my other stuff to surpass that long-term wise, or at least be in the same level or equivalency before I consider backing off and saying I'm retiring on dividends. So I think with the higher yielding portfolios, you may have a chance. I just don't believe in, how do I want to say this? Relying completely on the weekly pay ETFs or the weekly pay growth and income ETFs in case of things go bad. I like to have balance, and that's what I'm going to continue to do with my portfolio. So I'm going to keep on reinvesting. Now, this is not guaranteed $8,473 right here. This is an estimate. I need to be consistently making at least $10,000 a month, consistently for at least 1.5 years straight before I can maybe say I feel good and it's time to flip it. So that's my philosophy. That's my goal. That's what I plan on doing. So again, I'm reinvesting, putting money in, reinvesting, putting money in. That's my strategy and my agenda for these next 2 months to see if I can pave the way for next year to really have a super powerful dividend portfolio. And of course, I need to max out my IRA. I got like 3,500 left to do that. And I also want to max out my health savings account. So that allocation is probably going to be going into the health savings account eventually as well, because I want to max that out at the end of the year. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Please don't buy things because I buy things. I'm very clear with that. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice, please. Shouldn't use my videos for entertainment purposes only. Take care and have a good one.